we're seeing Bitcoin rebounding this morning, hovering just under $65,000. Now regaining some of the losses that were suffered earlier in the session, just above $64,000. Now regaining some of those losses earlier in the session. That was driven by tension playing out in the Middle East. Now the move higher coming ahead of that highly anticipated Bitcoin halving, which is expected to happen this weekend and maybe even as soon as tonight. So what's ahead for crypto and miners? Joining us now, we want to bring in Zach Bradford, CleanSpark CEO, Bitcoin mining company here. Zach, it's great to have you. So talk to us just about first the price action that we've seen in Bitcoin, specifically this week in reaction to some of the tension escalating overseas in the Middle East. What does that signal just in terms of that volatility then we're likely to continue to see for Bitcoin?
You know, Bitcoin is always a volatile asset, and it trades a lot with macro events just as much as it trades amongst inflows and outflows. So, you know, we're seeing this as just a macro reaction. But what we're seeing is the bounce back, we believe, shows very strong support. So, and this bounce back is coming, as was previously mentioned last segment, amongst net outflows amongst the ETFs due to grayscale. So we really believe that this is Bitcoin showing quite a bit of resilience amongst a risk environment is how we're perceiving it. So we're feeling like good things are ahead for Bitcoin still.
What do you make of those outflows due to grayscale, Zach?
You know, I view it as, you know, who wants to stay in the ETF that has the highest fees? It's just capitalism at its finest, where the outflows are going, we believe, into other avenues, probably to lower fees. But because settlements in ETFs are sometimes T+1, T+2, T+3, there's always a delay in how the capital's moving. And, you know, we think a little bit is finding its way into the Bitcoin miners as we are at, you know, some lower points for the year to date. And hopefully there's some people seeing opportunities there.
Zach, let's talk about what specifically this means for your business, what it means for some of the other Bitcoin miners up on the screen, because when this halving takes place, you're essentially getting about half of what it is right now. So talk to us just about the impact that this has on your business in the short term versus the long term, and why you're still seeing that long-term view as more of an opportunity.
Yeah, we're actually pretty excited. An important thing to understand is, you know, this is about the elegance of the Bitcoin network itself. And we've all known that this was coming for 4 years. And so large scale miners like ourselves that have been able to plan for this are actually set to get a bigger piece of the pie. Because although we will go from about 900 Bitcoin, new Bitcoin a day being produced to 450, what that means is the efficient miners who have good solid margins will continue to have margins that are very healthy. But miners that were maybe smaller, didn't have scale, or were inefficient when it comes to their energy usage, therefore their costs are higher, they won't be able to keep running their machines. And as a result, there will be less participants taking a piece of the pie, and therefore the large miner, our piece of the pie should get bigger after halving. We think to the tune of, you know, 10, 15, or even 20%.
Okay, and so that's looking at your share of production. I mean, even as we think about, though, the halving and the costs to mine, now, essentially, aren't your costs to mine doubling in comparison to what the output or the productivity in the amount of Bitcoin that you're producing is?
No, you're absolutely right. Our costs will double, which is why it's so important. We've prepared to where our margins are well above 50%. So when this happens, you know, our margins may go from 70 to 35%. But again, we expect to see that change and adjustment happen where we'll regain at least a piece of that. But in addition to that, we think on a long-term basis, Bitcoin was built this way to create additional scarcity. We know exactly how many Bitcoin there's going to be in the future. And as a result, that should create an economic supply shock at some point in a cycle. And the cycle's continually repeated itself. So we think, again, Bitcoin will continue to go up. And so although our margins may decrease from, you know, today to tomorrow, we think on a long-term view, they regain that space and are even better as Bitcoin goes up into the next bull market, which we believe we're just at the beginning of.
Would you be buyers of any operations that might have to sunset as a result of the market share that you were talking about you have and the production capacity that companies like CleanSpark have?
Absolutely. You know, we've been very active in the M&A space for the last several years. And we see this halving event creating a buying opportunity. Because something that's important is their servers may no longer be profitable because they're not energy efficient or they're not run well. But we have done a great job. We've got 2 sites in the last 4 years that we were able to take from a less efficient operation to a highly efficient operation by upgrading the servers, by training the personnel better. So we're actually looking for opportunities right now. We have, many that we're looking at, and we expect that will continue to increase in the coming months as we see, additional slippages or failures of other companies. We see there's a big opportunity for us to step in, acquire at the cheap, hopefully, and then rebuild it back to a better, stronger business as part of our portfolio.
All right, Zach Bradford, CEO of CleanSpark. We appreciate you taking the time and joining us here on Yahoo Finance ahead of the halving.
Hey, thank you for having us.